Well, good afternoon, everyone. It's just before the US market open, uh, about 10 to 2 UK time. So I'm looking at the front page of VectorVest US, but the front page of VectorVest UK doesn't look much different. Uh, the shortest measure of the trend is down, the underlying trend is down, and the longest measure of the trend, a confirmed down, is also down. VectorVest doesn't advocate buying stocks at this time. So the sell-off, although the market is in a mega oversold condition, with the buy-sell ratio on its knees at 0.16 on a scale between uh, 0 and infinity, and the MTI at 0.66 on a scale between 0 and 2, both mega oversold levels. There's no hint of a turn as yet on the price action. So I've got the VectorVest composite in front of me. That's the VectorVest composite US. Those are the medium-term market timing signals that I use, known as the DEW, and they've done a really good job in this environment in clocking these ups and downs. That's the last long signal, short signal, nice long signal, and since the 21st of February, the trend has been down, and this doesn't look that wholesome to me, starting to look like a bear flag, and I think that bear flag needs to be negated before I would be interested in buying any stocks. As you can see, down around here, the MTI in this mega oversold condition and the buy-sell ratio on its knees. Okay, so I think even the most aggressive traders need at least the shortest term measure of the trend, what we refer to at VectorVest as a green light buy, to print before we would do anything. Nevertheless, a move out of this deeply oversold place can be a really, really great move. So I'm watching it carefully. But the purpose of the video today is to have a look at a market that has been pulling back for most of a year now, and that's the oil market. And I have, if I can find it, the oil exchange traded fund. This is OIL, which is an exchange traded fund that follows the price of crude oil. And this is a weekly chart. I'm looking at it over nearly 3 years since the low at COVID, when you couldn't have given oil away. So this is this trend, very easy market to have made some money in, and I'm sure you all have done. But it's been pulling back, as has the crude price itself in dollars, and been a very noisy market indeed. I think that we're actually getting to a low point here, folks. And technically, I put in the MACD indicator, which gives very strong signals on a weekly chart. This is a weekly chart I'm looking at. And as you can see, market has in fact pulled down, and it sat at that 62% retracement. Let's blow this up a little bit to that last swing. Stopped at the 62% retracement once, twice, 3 times, and then broke through it. And now it's only Wednesday, but if we were to close above that 62%, that would be a nice change here. Market going down through a fib level and then closing up through a fib level is frequently a little bit of stop loss running. As you can see, if I put on a horizontal line, the market in fact was bought at that last old top to the tick, which is very close to a 78% retracement of the range itself. Always difficult to draw fibs in a market like this, because the market makers themselves will be looking at how much volume was done within these spikes. So we've got a nice confluence there. On the MACD indicator, it seems to be falling in a falling wedge type pattern to that level. And the MACD has set up a slingshot, which is in fact a reverse divergence. Price is rising, indicator falling, and then in the last little bit, a little bit of normal divergence. So that's a very strong signal in my opinion. I think there's plenty of time to react to it, but I'm certainly starting to get excited about a nice swing up in oil. When it's time to buy, you won't want to. Everybody find it quite easy to buy up here, but you don't make any money by buying right at the top. So when it's time to buy, you certainly won't want to. And sometimes you make a right proper Charlie of yourself, because at this support level, the support can fail. And the market was falling. Everybody says you should have been selling it rather than buying it. But this looks to me like a high probability level of support that can hold. So what to buy? Well, you've probably read that Warren, Mr. Buffett himself, has been buying into Occidental and increased his stake in Occidental. Occidental is quite interesting because it certainly hasn't pulled back nearly as much as the overall market itself. And it's setting up a very strong reverse divergence from this low to here, and from there to there. Very strong and marked slingshot. It's taken out an awful lot of these obvious lows. In fact, that low of a couple of weeks ago went right down below these lows way back to April last year. So it's taken those out, and to me, this looks as if it wants to move strongly if the oil price moves strongly. So that's something that you can think of, and you're clearly in exceptionally good company there. Now, I like the look of this stock. LNG. Where did I find the stock? Well, I in fact just looked on VectorVest at all of the oil companies, and I ranked them by VST. And LNG came a highest combination of VST. Let's just have a look at that if I can find that. Go to viewers, and as you can see, it's got on VectorVest, it's got a relative value of 1.7, and that means that we believe the share price is going to outperform a corporate bond by 70% over a window of 3 years, and anything above 1.3 is good. 1.7 is excellent. It's got a fair to good safety and predictability of earnings, and unfortunately at the moment it's trending downwards. And it's got a VST of 1.28, which is a RV, RS, RT, all combined into a master indicator VST. Should grow earnings at 38% next year. And Occidental is, in fact, pretty much the same, growing earnings at 33% next year. They're both on about the same PE going forward. So on LNG, if I can find it again, there we are. We can see this beautiful trend over the last 3 years since the COVID lows. Textbook trend. It's now seems to be in a triangular pattern. And those of you that are Elliott wave type people, you'll know that that triangular pattern invariably is a wave 4, and that should in fact have a wave 5 to come. Now, as you can see, it's making rising bottoms, and this low a couple of weeks ago was defined by this simple trend line. The old MACD is making a falling bottom, and that's a textbook slingshot, folks. We haven't got quite this crossover yet. That's a very strong signal on a weekly chart, and of course you could take the slingshot right back to there if you wanted. Okay, so that's a slingshot of 15 months. That looks very strong to me. And if I put in earnings per share, where is the darn thing? There we go. Earnings per share. There's earnings per share rising over the last 3 years. It's risen from $5 to $20, not too shabby. And if I put on the VectorVest valuation, let's get rid of that, otherwise we can't see the wood for the trees. VectorVest valuation's right up there, and that I calculated roughly is the target from this triangular pattern. So we could easily have a run from $153 to $250, and that would be very nice indeed. Okay, so I think that there's a great deal of opportunity in the oil market. I will say it again, that it's when it's the right time to buy. I know that when I define the right time to buy, the ability to make some money, getting in early to the trend, you simply won't want to. And I think that we can wait on the oil price to confirm. There's the oil price itself, and clearly a break through that top trend line would be a signal that this move is underway. Maybe you could wait for a crossover on the MACD as well. That would certainly help. And a couple of closes above the 21 period moving average and a test of this trend line would be a good confirmation as well. But to me, it looks like a trade that's got a high probability of success. When I say high probability, I'm talking plus 60%. And I think that if it works out, we should make 2 to 3 times more than we would have to risk. And that is a positive expectancy system if you can keep playing the game. So on the stock market itself, nothing to do, folks, as we approach the open. Futures market's up a little bit today, but everything on VectorVest is down, and I think we need to give it at least a couple of days to show some green on here before we would venture anywhere near it. Maybe I'm getting too old and conservative, but there are old traders and there are bold traders, but there are no old bold traders, they say. I've been at this 40 years. So have a great trading day, everyone. Bye-bye.